Ladies and gentlemen, good day and welcome to Capacit'e Infraprojects Q3 and 9 months FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Capacit'e Infraprojects has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Capacit'e Infraprojects business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Rohit Katyal, Executive Director and CFO. Thank you, and over to you.
Good morning, everyone. On behalf of the company, I welcome you all to the Q3 and 9-month FY23 earnings conference call of the company. Joining me on this call is Mr. Alok Mehrotra, Mr. Nishit Pujari, and our IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Our progress in the quarter and 9 months of the current financial year under review reflects our resilience amid a challenging macroeconomic environment coupled with excellent teamwork of our colleagues. With a healthy order book, sustained order inflow, and our expertise in executing and delivering projects on time, we are optimistic that we shall witness a healthy and sustainable growth. We will continue to expand our reach, invest in our talent pool, and unlock efficiencies to deliver a robust performance year after year. The strong impetus from the government for housing sector in the recent budget announcements and favorable policies all are very positive for the sector and overall economy. The project awarding has seen an uptick and likely to gain further momentum in the coming quarters. We are confident of achieving our guided order book for the current financial year. Our robust execution capabilities coupled with strong repository of asset base enabling efficient execution reflected in the strong revenue growth. Let me appraise you with the key updates. The company has been awarded projects worth 3,313 crores excluding GST for the 9-month ending FY23. Appeals against the income tax block assessment orders have been completed for the period up to March 2020. All the disallowances made by the department have been decided in favor of the company. As a result, the contingent liability relating to income tax demand amounting to 31.15 crores as disclosed in annual report of 2022 will no longer be required. Godrej Realty has come in as a developer along with DB Realty for One Mahalakshmi project, earlier known as Radius DB Realty project. The company has entered into a settlement agreement for rupees 11.33 crores. Accordingly, the client has released the first tranche of rupees 6 crores in the month of January 23 and will be releasing the balance amount before the end of the current financial year. The company is expecting recoveries from other slow-moving debtors as well. Now let me come to the performance highlights for Q3 FY23. Revenue for the operations Q3 FY23 grew by 21% to 443 crores as compared to 367 crores in Q3 FY22. EBITDA for Q3 FY23 grew by 40% crores as compared to 64 crores in Q3 FY22. EBITDA margins for Q3 FY23 stood at 20.1% as compared to 17.2% in Q3 FY22. EBIT for Q3 FY23 grew by 5.1% to 56 crores as against rupees 37 crores in Q3 FY22. EBIT margin for Q3 FY23 stood at 12.4% as compared to 9.9% Q3 FY22. PBT for the current quarter ending Q3 FY23 grew by 62% to 31 crores as compared to 19 crores in Q3 FY22. PBT margin for the quarter FY23 stood at 6.9% as compared to 5.1% in Q3 FY22. PAT for Q3 FY23 grew by 15% to rupees 23 crores as compared to 14 crores in Q3 FY22. PAT margin for the quarter ending Q3 FY23 stood at 5.1% as compared to 3.7% in Q3 FY22. Now turning to the performance highlights for the 9 months ending December 22. Revenue from operations for 9 months FY23 grew by 36% to 1352 crores as compared to rupees 993 crores in 9 months FY22. EBITDA for 9 months FY23 grew by 59% to 275 crores as compared to 173 crores in 9 months FY22. EBITDA margin for 9 months FY23 stood at 20.2% as compared to 17.3% in 9 months FY22. EBIT for 9 months FY23 grew by 66% to 166 crores as compared to 100 crores in 9 months FY22. EBIT margins for 9 months FY23 stood at 12% as compared to 10% in 9 months FY22. PBT for 9 months FY23 grew by 97% to 99 crores as compared to 50 crores in 9 months FY22. PBT margin for 9 months FY23 stood at 7.3% as compared to 5% in 9 months FY22. PAT for 9 months FY23 grew by 98% to 73 crores as compared to 37 crores in 9 months FY22. PAT margins for 9 months FY23 stood at 5.4% vis-a-vis 3.7% in 9 months FY22. Gross debt stood at 353 crores excluding promoters' debt, with gross debt to equity ratio at 0.3x. Net debt stood at 214 crores with net debt equity at 0.2x. The company continues to focus on increased execution across projects. Order book on standalone basis stood at 9764 crores as on December 31st, 2022. Public sector accounts for 67%, while private sector accounts for 33% of the total order book. The floor is now open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah, good morning, sir, and congratulations on another good quarter and good to see some of liabilities getting off the books. So my first question is, are you still expecting flat revenues for Q4, given that our guidance was 1800 crore, or do you revise our guidance for Q4 especially?
Yeah, morning. Our target continues to remain unchanged at 1800 crores. And with the performance of 9 months, which has just been elaborated, we are confident of achieving that figure for the current financial year.
Understood, sir. Secondly, sir, the order inflow, I think we have surpassed our guidance of 22 billion. We are already at 33 billion, if I am not wrong. So how does the pipeline? So do we have the more appetite to take the orders for the next couple of quarters? And how is the pipeline looking at this point of time, especially in MMR?
The pipeline is extremely strong across sectors, including residential, commercial, healthcare, and institutional. But on the private sector side, there are various launches planned, and therefore we do expect certain repeat orders from existing clients within the same location, which obviously should not and cannot be avoided. So from guidance perspective, as we stand today, we are L1 in another 800 crores of projects in the public sector, which should get translated within this quarter, early next quarter. Apart from that, we are expecting a couple of repeat orders totaling to about 500 crores in this quarter. As rightly said, we have surpassed our target for the whole financial year, but repeat orders are such that the client who has been there during thick and thin with the company over the last 5 years, 6 years and more, cannot and should not be refused to. For the next financial year, while the guidance will be given during the next earnings conference call, we are very confident that the momentum will continue, and we should continue to maintain the 3.5 to 4 times order book of our next financial year's projected revenue.
So are there some large tenders in pipeline where we are bidding for?
Now, the definition of large, if you can elaborate.
Anything around more than 1,000 crores, sir?
Number of projects. You have data centers, which we are actively looking at. You have residential buildings, which now, as you are aware, government also is constructing buildings which are in excess of 45, 50 stories. And when they are in locate, the value obviously doubles or maybe it is 2.5 times as when compared to shell and core. So there are various projects across RLDA, the Railway Land Development Authority, who is entrusted with upgradation and construction of 170 railway stations. Most of the tenders are upward of 600, 700 crores. So there are substantial stations in valuing excess of 1,000 crores going all the way up to 5,000 crores.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Dhananjay Kumar Mishra from Sunidhi Securities. Please go ahead.
Hello, sir. Congrats on decent sets of numbers. Just wanted to am I loud or clear?
Yes.
Yeah. So just wanted to check where we are in terms of our busy bank guarantee limit and the retention of release of retention money, which we were expecting very soon. So where we are on that front?
So the proposal is in the final stages with State Bank of India. The lead bank has already circulated its final assessment note, and we expect that in the current financial year, the tie-up should be complete. So accordingly, the retention release will be planned on the release of the bank guarantee.
Okay. And
having said that, the cash flow collection is at about 77% of our top line, and with the release of bank guarantees for retention, you should see an uptick to close to 90% of the cash profit of the revenue.
So why is this delay happening? Because, I mean, we already have applied for this bank guarantee. Any specific reason why banks are not taking decision on that?
I have not understood. Pledge is not for the consortium limits. If you're asking that, pledge is... Can you please repeat your question?
BG limit, bank guarantee limit.
Oh, the delay is basically because it's a consortium banking arrangement, and only after the lead bank circulates the assessment note do the other banks take it up. So we have seen the delay, and we have called for the 4 bankers meet, and the banks have, then the lead bank, State Bank of India, has taken up the matter with the other banks very aggressively, and we hope that the resolution should happen very, very quickly.
And on CIDCO, hello?
Yeah.
So on CIDCO project, what was the contribution in this quarter, and what will be the contribution next quarter we are expecting?
The contribution in the last quarter was close to 70 crores from CIDCO project, and we continue, we hope and we believe that the momentum will continue. The 7th location has been formally handed over to the company, for CIDCO, and the environmental clearances from the client are expected in the next week. So we do believe that the preparatory work will start at the 7th location from March onwards, now since the location has been handed over, and it will start translating into revenues from the Q1 of next financial year. So we do see extremely robust revenues from CIDCO, as you saw in the last quarter, getting into the current quarter and the whole of the next financial year.
So it has come down from 85 crore in Q2 to about 70 crore this quarter, right?
80 to 75.
From 80 to 75 crores, because certain variation bills will be billed in the current quarter.
Okay. So this quarter, in last quarter, you indicated that Q4 will be about 150 crore. So we are there at 150 crore for this quarter, and if you see the monthly run rate of Jan and...
Sir, I do not believe that we will be at 150 crores because MADA project has also started, which has contributed close to 30 crores in the last quarter. And we believe that it will also contribute close to 35 crores in the current quarter. And CIDCO, we believe that once our variation bills get billed, we should be close to about 90 to 100 crores in the current quarter. Because 7th location will start from the next quarter only. And that is when you will start peaking at 60 crores per month.
From the Q1, FY24.
Absolutely.
Okay, sir. That's all from my side. All the best.
Thank you.
Thank you. We have a next question from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah. Sir, our asset turn ratio has been pretty poor over the last so many years as compared to, say, an Ahluwalia construction. Will this, this latest, the rise in sales and overall execution getting better, raise the asset turn, and what is the asset turn we are now targeting for the next financial year?
Mr. Hawa, right? You see that a 35-year-old company cannot be compared to a 9-year-old company who has created a gross block of 650 crores. The net block is at about 440 crores of the core assets. In the current financial year, we should be at about 4.5 times asset turn, and we should increase that to 5.5 times, as explained in the last call. I believe that 5.5 times with an average asset life of 6 years or lower is a very strong asset turn to have.
But then why are we not, because this is, depressing our ROC, ROE, so, and it's like, a constant thing with our company. And that's why, the valuations also tend to get depressed. So is there, while your point taken about a young company there, but is there no other, steps that we can take to mitigate this?
Yeah, the steps have already been taken. We have refrained from taking any projects which are high on capex, and therefore the capex will be substantially lower than the next financial year or the prior years. The capex plan for the next financial year also is about 45 crores, and therefore we do believe that the net value of the core assets, taking 50 crores as depreciation of the core assets, will fall in the next financial year as in the current financial year. And with the addition of only 45 crores, you should see a net asset value of close to 390. And with the revenue slated to go up by approximately 25%, your asset turn will increase substantially to close to 6. So 6 will be the highest asset turn of the company in its short history. And as this asset turn goes up and the value of the net block comes down of the core assets, your ROE, ROCE will see substantial improvement. However, on the other parameters, therefore we have declared our EBIT in this quarter. And if you see, there has been substantial improvement on all those other parameters.
And sir, where do we stand on orders from the from MADA? Do you feel that we can get further orders also in this central Mumbai space? Because this project looks like it will be expanded. And how do you see the railway space panning out for us? You feel that we can get fairly substantial orders there also?
So we are an end-to-end player in the construction space of our buildings. and we target quality clients across the spectrum. And therefore, we are bidding very cautiously, given our strong order book for projects which are accredited to our bottom line and add positively to the overall profitability of me. So therefore, we are not, it is difficult for me to say whether we are focusing on central Mumbai or south or whether MMR. There is opportunity across the geography where we operate, including opportunity in Delhi NCR, especially from government and autonomous bodies floated by the government. And the order book target, which has been surpassed by nearly 33% this current financial year, clearly shows the trend where the private sector continues to give repeat orders and government sector spending, which we just spoke about during my opening comments.
And so there was a lot of this service revenue that we were going to get from the MADA contract. Has that also started coming in? Is it, and is that playing also on increasing the EBITDA?
Absolutely. Absolutely. So the design charges have kicked in MADA project. The first tranche of 4,000 crores, which has been subcontracted at 35% to Capacit'e Infra and 65% to Tata Projects Limited, is in full swing. And we do believe that the efficiencies of scale, as committed with, will kick in the next financial year in MADA itself.
So at least 1.5 to 2% EBITDA increase would be due to these service revenues coming in?
I wouldn't like to comment on that. It's quite early. Our guidance with the accounting mechanism which we follow is 18% to 18.5%. On the full year, I do expect that since 9 months have been completed, we should be doing a tad better than the estimate given of 18 to 18.5%. So currently we are at 20%. So there has been an expansion of 1.5%. It would be nice to end the year on a similar note.
Sir, I appreciate you answering my questions so well. Thank you.
Welcome.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Mukul Verma from Verma Associates. Please go ahead.
Yeah, good morning, sir. Congratulations on a good quarter.
Yeah.
Question is that last quarter in the Concall you had mentioned that you signed some settlement agreements with your old project with the Radius Group, and some High Court has sanctioned some favorable verdict in case of the IGIMS project. And we were expecting to receive 55 crores in coming 3 quarters. So I just wanted to know how much have we received in the quarter gone by, and what is the receipt target for current quarter?
So in totality, against the verdict received in IGIMS, our bills have been submitted and expected to be certified over the next 15 days. We have already received 3.55 crores against that project. Secondly, against the Radius project, One Mahalakshmi, I just said in my opening comments that we have already received out of 11.33 crores an amount of 6 crores. The remainder 5.33 crores will come in this quarter, along with some substantial money expected from IGIMS. There are other projects also where the settlement agreement in final stage. However, I shall be better placed to comment on that by March, mid or thereabouts.
And since we have won this income tax thing, is there any refund coming from them, or it was just a liability which has been...
6.55 crores has been received. 12.28 crores has gone to the treasury, and another refund order of 12.5 crores or thereabouts has been approved and is under processing. So the total cash inflow from income tax refunds expected by the end of the current financial year will be to the tune of 30 crores or thereabouts.
Okay, that is great. And if you can give any color on the MADA thing for the ensuing financial year, like how much would approximately be contributing to the top line of the company?
I believe that we should be close to 60 crores.
for the full year?
No, the revenue is basically kicking in more so in quarter 3 and quarter 4. Quarter 2 was, I think, 10 crores.
No, I am saying in FY23-24 for the full year.
For the full year, for the full year, we are committed to do close to 250 crores to 300 crores at Capacit'e infra level as a subcontractor to the LLP. At the LLP level, obviously the revenue will be much higher, but we cannot recognize that revenue. Obviously, the PAT at the LLP level will be recognized as profit from associates in our financials.
Okay, that's great, sir. Thank you. That's it from me.
Thank you.
All the best.
Thank you. We have a next question from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. My first question is, sir, just wanted to check how big is the data center opportunity and what is our scope of work in that?
The data centers which come in the private sector have a bifurcated CC works, that is shell and core, and the electromechanical works. However, the data centers coming in government, we now see that it's a complete lump sum turnkey project. So if a shell and core is, let's say, 350 to 400 crores, the electromechanical could be close to 1,200 crores. So data centers opportunity across India, both from the private sector, but players like Amazon, Google, and alike, is tremendous. Apart from that, there's a government push for data centers both at the state and the central level. We are currently constructing data centers for Department of Telecommunications through BSNL, which are on the final verge of completion. We should be through that project over the next 6 months. So we do see the opportunity, a very big opportunity in this segment. However, I cannot pin down a specific number that it would contribute to our order book or the revenue for the next fiscal. The market for data centers has recently matured, if I may say, in India, and it definitely shall be one of our focus areas in the coming financial years, starting from the next financial year.
Got it. Sure. So, sir, some bookkeeping questions. Capex, till 9 months, how much we have done and how much is pending? And secondly, on debt, where do you foresee by this year end?
The total capex which has been done is 66.19 crores for the 9 months ending. I do not see much capex in the current financial year, in the remainder of the current financial year. The next financial year capex at the moment stands estimated between 45 crores to 50 crores. However, we are trying to push whatever can be done in the private sector to the client's scope of work. That's one thing.
Sure. On the debt?
On the debt side, we don't see any increase in the fund-based limits, though there is a 25 crore tie-up which is pending. We are hopeful of getting our bank guarantees. Basically, the company has to collect close to 250 crores in advances and retentions against submission of proportionate bank guarantees. And if that's done, then obviously the company becomes net debt free and further has 100 crore cash available for expanding operations.
Got it. Sure. And so lastly, in terms of, our unbilled revenues, debtors, retention and mobilization advance?
Sir, this is a very long question. You may please send a mail to our IR team.
Sure.
They will respond immediately.
Sure. Thank you and all the best, sir. That's it from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and thanks for taking my question. So my first question is on the competitive intensity in the industry. I mean, obviously there are a lot of opportunities. So are we seeing that we may be able to get, let's say, a premium pricing or margins which are maybe higher than what we have done historically while bidding for new projects?
So the competitive intensity perspective, building sector is one sector where the organized players are 7 to 8 at best. Geographically speaking, except L&T and Shapurji, who are pan-India players, you don't have specific India players. Okay, like us, they may be in 5 cities or 6 cities, or you may call them 6 or 7 states. Like Delhi NCR is one state or one geography for us. For some, it may be mentioned as 3 states. So from that perspective, most players, organized players in the building construction segment, which include ourselves, L&T, Shapurji, GMC Building Division, NCC, Ahluwalia, PSP, BL Kashyap, and maybe a couple of others, are more focused, excluding L&T and Shapurji, on their geographies and where their supply chain management is strong. So we will continue to focus on that, and therefore, with limited players being the competitive intensity in building construction for projects which are upward of 350-400 crores in the public sector, because private sector obviously is on invitation only and not open to anyone and everyone. So in public sectors, the competitive intensity in projects above 400 crores is fairly low, which gives us a good opportunity, and other players as well, a good opportunity to bid and win projects at fair pricing. So that's one thing. Number two, players who execute on lump sum turnkey basis, including design build basis, are even lesser. Therefore, when you see our order portfolio, nearly 60% of that comes from design build LSTK projects, where engineering efficiencies come into play, thereby giving us an opportunity to improve our margins, whether it may be at EBIT level, EBITDA level, or PAT level.
And in terms of MADA project, what is the status in terms of how much work area have we got, design, etc.? What has been completed, and how do we see the project shaping up in FY24?
So we have only started the works practically from last 7-8 months. As on today, 8 buildings of 40 stories are under construction in full swing. We expect total 18 buildings of the rehab of 40 stories to be made available as committed by the client by first quarter in a phase-wise manner. 18 buildings would mean approximately 3,500 crore of work front will open, Capacit'e's share being 35% of that.
That's it from my side, and all the best.
Thank you.
Thank you. We have our next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yeah, please go on.
Yep. Thank you very much, sir, for the opportunity. So first up, I just wanted to understand, now you mentioned this year by FY23 and we are looking to release some retention money. I think around 160 crores of retention money was locked in, right? So that entire amount we expect to get released, expected to get released by this March or so some timeline on that?
See, we are expecting our bank guarantee sanctions. And therefore, the quantum which would be released, there has been release of about 20-25 crores over the last 2 quarters, including the current quarter. However, the retention continues to be at about 169 crores because the revenues also have gone up and there is retention on the executed portion also. So when I said 250 crores, I include the advances of close to 90 crores in those collections. And 169 crores of retention. However, what will come through in March, it will depend on the bank guarantee release date, and that we will be able to communicate to you only by this month end. However, we are very optimistic that over the next 2 quarters, this entire money should get released and into the system of the company, thereby making us net debt free and adding substantial working capital, reducing our net working capital, and fueling the growth of the company to our projections.
Okay. So effectively, this bank guarantees we are expecting in next 15 days.
That is what our belief is. Of course, all the guarantees do not get released on one day, so it will start from bank to bank. So at the moment, we expect first release from State Bank of India.
Okay. And in 2 quarters, we are expecting that this entire 170 crores retention money should get released and
Not the entire 170 crore, because maybe 20-25 crores could be payable after the DLP, which is generally 1 year. However, having said that, I am combining the mobilization advances of the orders in hand, which are yet to be taken, plus portion of the retention which needs to come into the company, which are due and payable.
Okay, understood. So, are we facing any kind of execution? I mean, generally what we see, third quarter is always better than the second quarter, right? But it's largely the same this time around. So, is it because of the retention money or the lower bank guarantees that we are facing some hiccups in execution level? Would that be a fair understanding to have?
So we have crossed the FY21 numbers. We are at 1350 crores for the first 9 months. And we are slated to do close to or something better than 1800 crores for the full year FY23, which is an increase of nearly 35-37% over the last financial year. So the operations at all projects are going on.
Okay.
When you see flat revenues, that means we are working in optimum. However, the location number 7 of CIDCO has been just released. That will get translated into revenues from first quarter of the next financial year. So your entire order book as on today, which we just mentioned, close to 9,800 crore, is operational and therefore should translate into the revenues, what we have just been discussing. And therefore, there is no doubt that money in-house is better than money with the client.
Correct.
And therefore, if 200 crores would have been, you would have seen reduced finance charges, number one. You would have seen a much better working capital cycle. And number 3, you would have seen cash and bank balance with the company, towards which we are working for. So it has not impacted the operations, but it definitely has impacted the profitability, as the finance cost would have been much substantially lower with this money with the company.
Fair enough, I understood. And my final question is on your revenue. I mean, in the previous call, we have said that we are looking at 22 to 25% revenue growth for next few years, right? Now, FY23, we have already given a target of 1800 crores plus. So from FY24 onward, is that the range we should be working on with?
That's given because that is a commitment to the client. So as I told you, the orders which currently are with the company are all operational. And we have drawn up our plan for the next 24 months. We suggest that the growth has to be what you just mentioned of over 20-25%.
From FY24. Okay. Yep, that's it from my side, sir. All the very best. Thank you so much.
Very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Vishal Srivastava from Swan Investments. Please go ahead.
Hi, sir. Thank you for taking my question. Most of the question has got answered, and congratulations for good set of numbers, sir. Sir, one bookkeeping question regarding the trajectory of depreciation last 2 quarters. In fact, 3 quarters have been more or less in the range of 42 crores, 32 crores, and 34 crores.
Yeah.
During Q1, you have explained that this was due to the change of method from with material to without material for one big client. But it has not normalized. So we understand about the Q1, but Q2 and Q3 as well, it remains elevated. So can you throw some light in this area, sir, please?
So the reduction, and it will be at about 120 to 125 crores. You have to, when you see the fine print, or if you clarify it with our IR team, they will explain to you that the site establishment, which was 225 crores as on March 22, today stands at 167 crores or 162 crores, I'm sorry. So there has been a reduction in the site establishment after the accounting change. which now is as a percentage to your sales or to your expenses, percentage completion method. And therefore, the depreciation of 32 crores per quarter will continue till the time the site establishment becomes a zero, and thereafter the depreciation will be close to 15 crores per quarter for the core assets alone. Hope to have answered your question.
Okay, sir. Okay. So this will be, as you said, till the site has been completed. So
no. So I repeat, 165 crores is the site establishment unamortized.
Okay.
Which is getting amortized at a rate of close to 20 crores per quarter.
Okay.
Right? It could be higher in some quarters. It depends on the revenue. So if the revenue goes to 500 crores, that much more amortization will happen. Once it goes to 600 crores, the amortization will increase further. So the site establishment is nothing but the initial expenses for the order book which you carry, which currently is less than 2%. And we believe that this amortization should happen in totality over the next 8 quarters or earlier. So once that amortization is complete, 162 crores I just mentioned, at 20 crores per quarter, approximately, or just a little bit more than that, you will not have anything to depreciate any more. And therefore, the depreciation per quarter thereafter will fall to 12 to 13 crores for the core assets alone. Net block of which is close to 440, 450 crores.
Great, sir. Got it. Clear now, sir. Thank you so much for this explanation, and all the best for the future. Thank you, sir.
Thank you. We have a next question from the line of Faisal Hawa from HG Hawa & Company. Please go ahead.
So, to me, this is now looking like, we have like so many orders that we can actually now choose that.
I'm sorry, you're sounding muffled.
Yeah, can you hear me now?
Sorry?
It's still the same.
Can you hear me now?
No, Mr. Hawa. Use your handset, please.
Yeah. So, to me, this is now that, we can actually pick and choose our orders, and, going forward, what is the kind of, EBITDA margins you are targeting for new orders so that, our EBITDA can rise probably even further? And is it even a good option to, raise the EBITDA and, let some orders go?
That's exactly what Mr. Hawa we have been doing. We have not been picking up any orders right and left. There were many questions in the first 6 months, why haven't we booked orders? And suddenly you see in that 1 quarter, 4 months, your order book has crossed the yearly target. So the point is there is no pressure on the company to book fresh orders at the cost of sacrificing the overall EBITDA guidelines internal to the company. And more than EBITDA, we would focus on cash PAT and the free cash flows a particular project would generate for the company. Because whatever investments at a high level of more than 660, 670 crores at gross block level were to be done, have been done by the company. It is high time that we start making cash margins from operations after adjustment of finances from next financial year onwards.
Okay, thank you a lot, sir.
Thank you.
Thank you. We have our next question from the line of Mukul Verma from Verma Associates. Please go ahead.
Sir, I assume this year you would be clocking the highest ever PAT in the history of the company. Now that in 3 quarters you already done 74. So
yes.
Would you be going back to the dividend policy from this financial year?
Allow me to answer this question for something next time.
Okay.
So it will be dependent on the board. I cannot take the decision. But yes, if your good wishes are there and we get our bank guarantees, you will see a good dividend payout. But dividend payout is not directly dependent on the net profit, but realization of the receivables, of which nearly 250 crores is held up with the clients at the moment in time, and we are actively engaging to get those released.
So these bank guarantees, what have been stuck for quite some time, do they have anything to do with our ratings, which were supposed to go back to A minus, but was then rated triple B plus, or it doesn't matter really?
If you check up the companies who have been restructured 4 times, have 400, 500 crores more guarantees than me. So that is not the criteria.
Okay.
The banks very well understand, and the market, including you, understand that no D-rating can go to triple B plus in 3 months.
Correct.
So we all know the facts, and we will not visit that domain again. But having said that, there are procedural delays. We follow the straight line method in depreciation and also as far as our conduct is concerned. So there are procedural delays. Let the guarantees come, and we will continue to try and get our monies which are withheld with the client due and payable over the current and the next quarter.
Great, sir. Thank you. All the best.
Thank you. We have a question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yeah.
I just wanted to have this follow-up. I mean, in terms of depreciation, how we see the trajectory? I mean, depreciation have been quite, like it used to be in the range of 26, 27 crores, then it went up to 40 crores, now it's in the range of 32, 34 crores. So how do we project that? I mean, some understanding if you can provide on that. Yeah.
I'll say explain. In the quarter one, due to an adjustment of one single project, the depreciation was 42 crores. Thereafter, the depreciation is average 32 crores. It will continue to be 30 crores over the next 8 quarters till the site establishment lying in the gross block of the company is completely written off. The site establishment gross block was 225 crores or thereabouts as on March 22, after when the accounting policies were changed to input method. Today, the gross block on unamortized or unwritten off site establishment is 162.5 or 165 crores. So there has been a substantial reduction in that. This reduction will start impacting the lower depreciation in the coming quarters. However, at the end of 8 quarters, starting March and ending March 25, you will have 0 site establishment in the gross block, at which time the depreciation will fall to 12 to 15 crores per quarter.
That will be post-March, right? When we would have, expensed all this 30 crores per quarter for 7 to 8 quarters, right?
Absolutely. But if you can send a mail to our IR team, they will be able to explain to you better.
No, I understood. I got a fair understanding. Okay. And even in the interest cost, post we expect like in next 6 months, the retention money to get released. So our interest cost would also kind of, be halved, from current levels of what, 24, 25?
Yeah, it's not half. When you grow businesses, you issue bank guarantees also. When you issue bank guarantees, you pay commissions also. All right? Many companies recognize interest charged by the clients on mobilization at once at the site level. We recognize that in the finance cost. All right? So it is not comparable, the two companies from finance cost perspective. Yes, we do believe that if 250 crores is received, then the fund-based debt will reduce by 100 crores at bare minimum. And to that extent, approximately 12.5 crores or 12 crores of high-cost debt interest will come down for the company.
Annually, 12 crores reduction.
Annually. How much will be the saving on bank guarantees or LC discounting or discount charges? That depends on the revenue which we are going to achieve. And even if that goes up or reduces by a couple of crores, as a percentage through the top line will be lower with the interest coverage ratio improving significantly.
Fair enough, I understood. Yep, that's it from my side, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Rohit Katyal for closing comments. Over to you, sir.
I would like to thank all of you once again for joining us on this conference call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarification or feedback. Thank you and see you in the next quarter. Bye.
Thank you. On behalf of Capacit'e Infraprojects, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.